What's up, you guys? Welcome back to the podcast. It's Thursday at 4 p.m. You know what that means. We're here live, hanging out with you, talking real estate. This is the New and Experienced Investor Podcast, the #1 live podcast in Laguna Hills. I'm one of your hosts. I'm Alex Barnett. I'm the new guy.
And I'm Joe Holmes. I guess that makes me the old guy. Oh, no, the experienced guy.
Over 40 years.
Yes.
That's a lot.
That is a lot.
That's good.
Don't start me off being depressed.
No. That's good.
Okay. Yeah.
That's what I can't wait till I have that much time under my belt.
No, you can wait.
Okay.
Believe me.
All right,
Yeah. Take your time.
Okay, I'll wait.
Take your time.
That's fine. We have an amazing guest in studio today. He's getting ready to rock the show. Before we bring him in, let's talk about our meetup we got coming up December 23rd.
December 23rd. Hope you can make it. I know it's 2 days before Christmas. We debated whether we were going to have it or not, but we decided to have it. It's our crystal ball event, basically where I predict the future. And Alex is looking through the archives to see what I predicted last year. Yep. And we'll see if any of it came true.
Mm-hmm. Yeah.
And then I'll predict again.
Yeah, the thing is,
I got a 50-50 chance, don't I?
Yeah. We have the archives that's sort of like at the Vatican. I have to go underground and dust it off. So I have to go down these long hallways. It's crazy. So,
Do you have any security?
No security, actually.
No?
Yeah, it's just wide open door, but nobody ever walks in. Yeah, it's pretty interesting.
Okay.
We have a guard cat.
That's right. We have a cat that guards the door.
The guard cat.
Yeah.
Nice.
Yeah, we trained her right.
Yeah. She hisses at you?
That's right.
She come by.
Yeah.
Anyway, December 23rd, Hangar 24, 6 o'clock. Be there, please. So you can listen to my predictions. It's going to be very interesting this year.
Yeah.
There's a lot of things happening.
Mm-hmm.
Not to get political, but we have a lot of things happening this year. So, be there. It'll be very interesting again this year.
Yeah, it's going to be great. It's a great place to just meet all different types of people from all walks of life in different sectors of real estate. So if you're looking for a partner or looking for private money contractors, they're all there. So please come out, hang out. You have the time off. Everyone's off that Monday. I know already. So it's like, what else are you going to do?
Yeah, what else are you going to do?
So
you sit around the house and do the honeydews that your wife tells you, you have to do.
Yeah.
You don't want to do that.
You don't want to do that.
No. Get out there. Meet some other people.
Exactly.
Put some deals together.
Exactly. Start the year off right.
Yeah.
So anyway, let's stop messing around here. Let's go ahead and bring our guest in. We're super pumped. This guy, he is helping others invest and create wealth, build wealth, and cash flow. Those are the two things I'm looking for in my life. So we're lucky to have him. Please, everybody, welcome Omar Ruiz.
Thank you very much, guys. I'm excited to be here and share some stories.
Heck yeah. Why don't you go ahead, introduce yourself to the audience. How'd you get into real estate? What were you doing before that? What led you here?
Yeah, sure. Absolutely. So, like Alex was saying, my name's Omar Ruiz. My company is called LeRu Investments. And I've been investing in real estate actually started just after the Great Recession. Before then, me and another partner friend of mine, we actually started a property management company with the intentions of being apartment owners. And so we figured that if we know everything there is about the property management side of the business, because in those kind of operations, the property management really is what makes you successful or can, kill your property. So there's everything we know everything there is about the property management side of the business. Doesn't matter whether we're in Texas, in Indiana, Ohio, or wherever. We can hire third-party managers, and as long as they're implementing our systems and procedures, then we mitigate that risk of having bad property management. Now, saying that, I won't say I've never had to fire property managers, but it's definitely helped us to spot out the red flags, identify them, and correct course. So when we started, it was we. It's kind of interesting, but we were me and my partner Jeffrey. We were big fans of Robert Kiyosaki. He came out with the the book Rich Dad Poor Dad, and I loved playing the game Cash Flow back then, and we used to host the games in our offices, and there was this late night. I used to watch a lot of public TV. Back then it was like KCET or PBS. Late at night. At 1 or 2 in the morning, and so there was this ad for. Kiyosaki was talking out there, educating people. And then somewhere along the lines, there was this big event happening at the LA Convention Center. I believe it was called the Wealth Annex at that time. But Kiyosaki was a big headliner there. But actually, and Trump was also a big draw there. Now, at that time, I wasn't a big, Trump guy. I wasn't, I've never been a big ego guy, but, I respected what he did. But we went there to see Kiyosaki, and it was a great experience because we went there and there was everything under the sun having to do with real estate, everything from fix and flipping, wholesaling, commercial, development, notes. And us being, kind of newbies, we went there, with pen and paper in hand, and we just took notes, furious notes like, none other, because we were just so motivated that we wanted to soak up as much knowledge as we could. And there was a particular gentleman at that time. His name was Dave Lindahl, and he was the one guy that was talking about apartment buildings. And what I liked was his and it's not his concept, but I guess the general idea about these, market cycles. And, I was, my degree was in marketing at that time. So he's kind of speaking my language, and it all made a lot of sense, having more units under less roofs, economies of scale. And so the whole concept made a lot of sense to us. We got educated there and went to a couple of boot camps, and just, from there we were going to meetings here and there. And there was a meeting that met up in Long Beach, once every week that we'd go on religiously. It was the only meeting that I knew of locally that was meeting every week continuously. So I really like that consistency. And like I said, we're just very motivated guys, and we just wanted to be around that, other investors, around that energy, people that were also learning just like us. And through a family member, we kind of created a win-win situation. They had a small little apartment complex out by the Mission Inn area of Riverside. But they were kind of struggling a little bit over there. And so we said, look, we want to get into this business. We'll do a win-win. Oh, that's what it was. They were trying to they were struggling so much, they were actually trying to sell it. But they had difficulty with that because they weren't really keeping clean financials. And so when you're looking to sell a property, the buyers want to see some financials so they can kind of figure out the cap rate and all that. And, they weren't really, savvy about that stuff. So we said, look, let us come up there. We'll manage it for you. And then we'll give you some clean financials, present those to a buyer, and, you get what you want. You have the property operating well, and you get your financials, and we get that experience. And so that's what we did. And so it was a little 7-unit out there by the downtown area of Riverside there. And back then it wasn't as revitalized like it is now. Back then it was in that revitalization, stage. And it was very interesting, for me being kind of a markets guy, just kind of seeing how that whole neighborhood and area was transitioning. But being there on site, I really enjoyed it because, we would drive out there, every day and just, and I still remember it to this day. I'd go in there with the with the broom on one hand, the sweeper on the other, and I'd just be in there walking around the parking lot, sweeping it up, like feeling like it was like my place. You know what I mean? And I think that kind of helped me out because there's kind of a I guess like a success principle. You want to try to be as close, whatever you want to get, you want to try to be as close to it as possible. So it's like being there on site. I kind of felt like, oh man, it was just a really great experience for me. But we learned a lot there. We had to kind of we had to kind of tame some tenants over there. There were some people that were kind of running roughshod over there, and it was affecting the good tenants over there. And I remember a great story. Now I don't recommend people do this, but one of our tenants was telling us that it's got so many stories over there. So one of our tenants, this is shortly after we took over there. He calls us just like a Saturday or Friday night in the evening. And it was a young couple, and they call us up, and the guy was kind of nervous. He's like, "Hey, there's guys over here. They're drinking, they're being loud, and all that stuff." I was like, "Oh, okay, good, yeah, okay. Go ahead and call the cops." And he was surprised. He was like, "What? It's okay if I call the cops?" "Yeah, call the cops right now. In fact, you know what? Don't worry about it. I'll call the cops." So the cops go. It was like 7 cop cars wind up, just. Coming down on this place, and yeah, so there was, and then with the same guy, there was one Saturday morning. We would go there like at odd times to just kind of see what exactly was going on, And one time we got there, it was like really early on a Saturday, like probably 7 or 8 in the morning. We get there, and we just see these guys like just lying all over a pickup truck. I mean, these guys were just, drunk off their asses, and, probably had just an all-nighter over there. And I just went up to the guys, said, "Hey, do you live here?" Like, "No." It's like, "Okay, get out of here. You guys got to go." So, and they were very annoyed because they had never had anybody, approach them there that way, And I told them, "Hey, I'm the manager here. You guys got to get out of here, or else I'm calling the cops." They got out of there. And then the tenant, who's, those were all his buddies and all that, we had to put pressure on the guy, and eventually he just moved on. And I think the last draw was another tenant was calling me up, and he was saying, "Hey, this guy, he's blasting his radio at 7:00 in the morning when he's going to work while he's warming up his truck." I said, "Okay, all right, I'll talk to the guy." And I just told the guy, "Hey, and then he was a Spanish speaker, and I told him, 'Hey, man, this you rent here. There's other people. You got to respect other people's peace and quiet enjoyment of their place." I told him, "Hey, if you want to go, play your radio as loud as you want and have your drunk buddies and all that stuff, why don't you go, maybe you should go buy a house." And I don't know, maybe that's what he did. Back then houses were still a lot cheaper, but eventually he moved out of there. And then, because usually it's sometimes it just takes one bad tenant to ruin it for all the other good tenants. And that was a bad guy. And once he moved out of there, then we were able to bring in good people in there. Everybody was paying on time. We were collecting rents. Everything was going smooth. We provided them several months of financial statements, and eventually they found the buyer. I helped them tour the place, and it worked out. And they sold it. They sold it actually. It was probably just before like 2008, right before the collapse was going to happen, the Great Recession. So, yeah, fun times.
Yeah, really. What a great experience, as far as, like you said, getting hands-on experience, being around something that you wanted to do eventually, like owning apartment buildings, learning how to operate it, yeah, that's all great. So I guess fast forward, now you're buying your own properties, and you have all that knowledge behind you. What else have you learned along the way that's kind of helped you become the operator that you are?
Well, one of the really important things is being really good at qualifying tenants. That is something that I think we have probably one of the most robust practices out there. And, we've learned this through, trial and error and all that over time. So let me kind of give you, just for some historical context, back then at that time, the economy was still shaky, still a lot of people, that weren't working, regularly and all that. It was not uncommon that you'd have people with credit blemishes. Maybe they had a foreclosure, things of that, you would see, it was pretty common back then. But there was two things that we adjusted that changed a lot for us. And one of the, I believe it was the second, we purchased this smaller apartment complex, and it was out in San Bernardino. Okay. And now at that time, we were kind of on a winning streak. We bought a property, it was doing well. We bought another one, and it was a nice little successful run there. So I think we definitely got, overconfident. That's what happened. But this property definitely humbled us. And I'm thankful that, we had that experience, because I think that's where you really learn, how to do things correctly. You can do, if you're always, winning and having good deals and all that stuff, but it's the more challenging ones that you really, you really improve your game. And on this particular property that I'm thinking of right now, because we had been doing well with the surrounding areas, we felt pretty confident about this particular property. It was kind of in this area, and I was really good at kind of deciphering what I call our like transition lines. So when you go from a rough area to a good area, there's some kind of a geographic, barrier, either a freeway or a street, or maybe mountains or something that separate one area from the other. And so in this particular area, there was a street there that I determined that was the transition zone. Everything from there going up north was cool, no problem. Everything from there in south, not so much. But we had purchased further in the north and then way down in the south, and that one was okay down there in the south. But then something here in the middle came up, and that's where we weren't very acute and aware of that particular market, that little neighborhood area there. But like I said, we'd had all these successes, so we kind of got overconfident and figured, okay, we can take this thing, no problem. Well, it turns out that was like one of the worst areas, to be in. But we kind of had, we actually, I think we had probably I don't know if it was the worst, but it was definitely a problem property on that street. So once we cleaned our property up, then things got better around us, because it was like our problem tenants there, and this property not only had one problem tenant, it had about 12 of them, and it was 13 units. Mm-hmm. So one of the big things I learned on that one, as far as acquisitions are concerned, is to verify the deposits. Because, sellers aren't always the most, honorable people out there, and, have integrity. And these guys were telling us, oh, yeah, rents are coming in and all that. And okay. And they had financial statements that supposedly backed that up, right?
Oh, jeez.
Well, that wasn't the case. We took it over, and I think the majority of the people had either balances, and we started, just collecting on it, and just, we were there. We were very present. And that was a good thing that we've always, done in all our deals. We've always been very present, very like, hey, kind of, the buck stops here. There's a great phrase that I learned along the way is that, for property management, you want to be fair but firm. You know, us as property managers and owners, we're going to provide you, a clean, safe place to live. We're going to take care of our end of the deal, our end of the bargain here. You got to pay your rent, take care of your end of the deal there. But these people were not doing that, and so we had to evict the majority of the residents. I think the only one that stuck around was a Section 8 lady. And she actually stuck around there until we sold the place. But yeah, I mean, it was craziness. We had, upstairs, there was a guy selling drugs upstairs. There was a guy in the back building. He was some kind of a gun runner selling weapons. There was I think there was a prostitute in another unit, and just all sorts of craziness. And so we get rid of everybody, and now we have to start leasing up. We got to find qualified tenants, right? So we kind of did what, I guess like most landlords do, yeah, okay, do you got your income docs? Are you making enough income? And then, like I said, at that time, the credit issues were kind of, were always kind of questionable. So you kind of had to like be a little bit flexible. But as long as people were working and the income was there, some people would be like in the 500s, but we kind of try to stay in that 600 range. But something unexpected happened to us while we were there. We went to actually, I believe it was like after we'd gotten people in there, we went through like a second round of evictions where we had to evict, a bunch of other people out of there. So something wasn't right. We'd figured that our qualification practices were solid, but something was amiss. There was a gap in there. So I went into the tenant files of all the people that were evicted and see if I could, find some clues there. What did we miss? Maybe we thought we were doing everything right. Maybe we missed something. I don't know. So I discovered something very interesting. Two things. Now, the one thing that was a commonality there, I don't think this was the reason, but all the people, and I'm not trying to say anything, but all of the people that had been evicted, they were all single moms. But like I said, I don't think that's the reason. I think that was just a situation. But what was the reason that I can pinpoint to it is that all of them had been at their jobs for less than 12 months. So I said, okay, well, that's kind of interesting, and my background, I worked in aerospace for many years. I ran quality control for machine shops. And, so you're always doing, statistical analysis and that kind of stuff. And so I looked at that and I kind of started reflecting on my own experience, hiring people, overseeing people, firing people. And it made a lot of, I kind of started seeing some connections where it's like, if you can imagine, when you're hiring somebody, you don't really know whether that employee is going to work out for several months, sometimes maybe even 6 months. But by a certain point in that, probationary period or whatever, you're either going to decide, okay, this person is not going to work out, or maybe they need more training or whatever. But if they're not going to work out, you're probably not going to keep them for more than a year. And so that was a tweak that we changed. So now we had a requirement, in order to qualify, you need to be at your job a minimum of 12 months. Once we made that change, no more evictions. And we do that on everything that we manage. And even during the COVID period, when, there was, people were losing their jobs or whatever, As far as our stuff here that we manage here in SoCal, I can only think of one resident, and they actually hit us up. They told us ahead of time, hey, they were working as a lifeguard, I think at the beach or something like that. They said, hey, we lost our job, we're not going to be able to continue. And I appreciate that they communicated with me, and we were able to, work it out, and everything was cool, no problem there. But that was the big thing that changed for us. And we continue to do
over the years, how has evictions changed for you?
Oh, dramatically. When we first started, we used to do our own evictions.
Mm-hmm.
It was a very straightforward process. You file your paperwork at the court, you go through your processes, make sure your filings are on there. It was not as crazy complicated as it is now. But one of the things, and this is an interesting thing about back in those times, people would actually ask me, because they knew I was in management, and these were people that were these are people that worked at the aerospace, because I was consulting part-time and focusing on the real estate business and the property management and all that. So they would ask me, hey, Omar, how do you know if the place that you're renting at is going in foreclosure? I said, oh, that's a strange question. Why are you asking me that? Well, it turns out this was something that was happening a lot, because so many people were getting foreclosed on in those times that what people would do, they'd get scared because, majority of the public does not know how an eviction works. So when people lose their jobs and they were scared of being foreclosed, in the middle of the night, they would leave their houses and then believing that any day the sheriff is going to come, but it doesn't work like that. There's a statutory process. Once these homeowners that were in default on their mortgage started figuring out, wow, my house is still empty, maybe I can rent it. That's what they did. And those rents, because they weren't paying the mortgages, those rents became their primary source of income. They called them shadow inventory back then. Mm-hmm. And because that was happening so much that, and we were talking about, Schwarzenegger was the governor back then and all that stuff. So he put in the law where if you were getting evicted on a property that was foreclosed on, you had to give people, I think now they changed it to like a 90-day notice, something like that. And basically, to answer your question here, the eviction process became so laborious, and you had to make sure everything you cross your T's and dot your I's, and for us it became too risky, especially for us managing other people's properties. I didn't want to be responsible for not doing something correctly with the courts and all that on the eviction, that then most people were forced to start working with attorneys. And that's the big thing that has changed. So I don't advise people to try to do their own evictions. Now, when you go to court on an eviction, it depends. Different municipalities. It's a lot. I'll tell you this: a lot more easier Orange County and the Inland Empire than it is in LA. Mm-hmm. LA is a whole different animal. And it also depends a lot on the judges that you get. In fact, it's interesting because the attorneys, there's kind of they almost kind of have like their own little kind of, group or whatever. They see each other all the time in the courts. They have their, their friendships and whatnot. And so they know the judges very well. They know who's more fair and who's more tenant friendly. And in fact, it's interesting because, there's a property, a new client, we inherited their residence over there. And this is up in LA. It's a property out there in Inglewood. And I kind of picked up on this. It seemed to me like the judge was trying to give them, some flexibility, because and I almost kind of had a sense that out there, especially in LA, because of the homeless issue that's out there, they don't want to put more people homeless. Basically, is what it is. So most people don't, when they get in front of a courthouse, it's you get very anxious. It's the first time going in there, and people think it's a people's court. No, it's not like that. It's a lot more intimidating, and all that. And I think the judges, obviously they know that. So it's like once a resident that's getting evicted is in court, it's like the judge is trying to get hey, this is for reals. You got to get your act together. You got to make some serious decisions, but I'm going to give you some flexibility. And that's kind of how it seems to be out there.
Yeah, we had an eviction one time where I think it was a judge from LA was substituting for the normal judge that we had out in Riverside County. And we were supposed to be getting the judgment that day, and she comes in, and then the tenant was given the sob story, and you can see her like tearing up a little, the judge, and I'm like, oh boy, this isn't gonna go good. She's like, okay,
there you go.
We're gonna give you some more time to, you say that you actually own this property, and we don't know that. We're like, no, we have the title right here. We're like, no, we're gonna let her. Yeah, we're gonna let her.
Wow.
Bring her paperwork in if she says she has proof. So we're gonna give her, another 3 weeks to do that. We come back 3 weeks later. She's like, do you have the proof? They're like, no. So like, she just got 3 weeks for free, basically.
Yeah, that's it's same similar situation in that.
Yeah,
and yeah. So
but the normal guy was a little bit more. He's like, this is what it is. You're not paying. Boom, done. Judgment. Move on.
Yep.
And once we saw her,
those guys are great.
Yeah, exactly. Yeah, but that's a lot of good experience. I mean, we had like 2 rentals and. Just went sideways just because of not knowing exactly what
Yeah, you guys should hire us.
Yeah, exactly. Well, now we're like, if we have any more rentals, we're definitely getting property management. So, it's a whole nother learning curve.
Yeah, I like that 12-month tip on the employment though. I think that's something I haven't heard to look for before. So
yeah, that mitigates
like
people
that.
getting laid off.
Yeah, it's a good idea.
And what's interesting in California, at least, people's records can be sealed, so you can be evicted.
Well, that was a recent thing. That was a recent thing, and I know that because I was trying to get rid of a tenant out there in Long Beach.
Right.
Okay, and we didn't find out. It was. I mean, I don't want to get too into the weeds about it, but basically there was a case that had to do with something about marijuana and some guy's personal, I think it was a date of birth or something. It was a court case, but it wasn't. At that time, it wasn't actually law. It was because of that court case that they made some kind of change in there. So we let this guy in law, and his everything looked clean, no criminal record. Well, we didn't know about this thing because, like I said, it wasn't law. They just changed the procedure in the courts. And so what my guys do now is that they go on, there's websites, there's one like called Pacer out there. But you can actually go in there and search by people's names and that stuff. And so when you did that extra layer there, then list of other things came up, and we were like, oh man, because he was just kind of a rude tenant to the neighbors there, and with parking and just that kind of stuff. And so we said, hey, it's over. You got to go.
Yeah.
Do you have some videos for us to watch?
I do.
Yeah, so we have a part of the show where we bring up some videos and we have you react to them.
Oh, okay.
Yeah. There's Joe's smooth transition there.
Is this going to be some fun videos?
They're all like real estate related.
Yep,
but,
yeah.
Awesome.
Yeah, here we go.
They're harmless.
Harmless. A lot of YouTube shorts. So the first one is 2025 crash predictions.
Oh, I've seen this guy.
Bust it up. Loud, please.
I have it as loud as I can
Okay,
go.
1 second. So click on this. And then that.
Ah, I see.
There you go. Yep.
Okay, let me bring this back down then. Sorry, guys.
Alex, you are the techie guy.
I know. I always get stuck with like what's going on. All right, we'll start this from the top. Here we go.
Mark my word, if you leave money in savings accounts or current accounts in mainstream banks or even challenger banks, that's a risk. Because Robert Kiyosaki been saying that
he realized a world economy based on debt, and the whole world is floating on it. And you have all of these people who think, oh, I don't have to worry. I have treasury. Because those lying financial planners, all they want to do is sell you that stuff. But without financial education, the average person is stuffing their 401k full of fake money, fake stocks, bonds. We haven't seen the crash yet. It's coming. It's the biggest in world history.
and they're this close to a bank run all the time. Mark my word, if you leave
Kiyosaki's getting younger, I believe
He's, he's on something. I don't know what he's got, but whatever it is, it's working for him.
Yeah, for sure. That's kind of interesting that you brought him up earlier because I was like, oh, he's in the first video. Although he has been predicting the biggest world crash, I think now for the last like 10 years.
Yeah.
There's been a lot of guys predicting crashes for.
Yeah.
It makes for great videos like that. All the down graphs and the money and it's all burning.
So
what are your thoughts?
Yeah, here we are at the end of the year. What are your thoughts?
Well, you know, I tell you, I think it is so difficult to predict things more now than ever because you have several things that are kind of throwing wrenches in the spokes. So one of the obviously, you know, the interest rates are going up, but what a lot of people are not, well, they're talking about it more now, but what I think is not getting the respect that it's due is the insurance. The insurance has blindsided a lot of people, you know, in the commercial spaces, especially in the commercial space. But that is something that, you know, maybe 3 or 4 years ago, when you'd underwrite deals, you'd kind of have a standard kind of underwriting number there, a factor. But now that has gotten a lot more, you know, I don't know if nebulous is the right word, but it's definitely more difficult to pinpoint. And you hear other, you know, experienced apartment investors, you know, definitely increasing their price per door on the insurance.
Right.
But I don't see, you know, we actually did like a little analysis on one of our properties and believe me, I've learned more about insurance in the last 2-3 years than I did in the previous 10. Mm-hmm. But there's just not enough of the reinsurers out there that insure the insurance companies, and that's basically what happened there. But we did a little analysis to kind of gauge, okay, are they coming down? And it was funny because we were expecting last year's to at least flattened out, and to our surprise, it actually went up a little bit. And we were like, oh, well, you know, this is that was very unexpected. But I think that's something that a lot of you know, in the last several years, probably maybe since COVID, because everybody was sitting around at home and, you know, watching, you know, whatever videos and thinking, you know, that the real estate game was, you know, easier than, you know, people led on to believe. They kind of haphazardly got involved, didn't do their numbers right. And now with the double whammy of interest rates going up and insurance going up, it was too much for them to absorb. And then if they weren't, you know, properly running their operations, it just wasn't working out. So, I guess to get to the bottom line on that, I think 2025 is going to be a kind of a transition year where, you know, the 2024 has mostly been a year where what we call the general partners on the deals, the syndication type of deals that we do, where those guys have been taking losses. And now 2025, I believe, is going to be the year where the banks will start taking losses. They've already taken losses, but they're doing a lot of this extend and pretend type of stuff. So how long they can do that and absorb that, I really don't know enough about the you know, internal machine there, and I don't know if anybody really does have a clear picture on that. But that's really kind of what's sustaining things. And you know, the interesting thing when I reflect back to, you know, the Great Recession and, you know, 2007, between 2007 and 2008, is that even back then there were still guys that were saying, hey, and these were guys that were on TV saying, hey, this thing's going to come back and all that stuff. And it went the other way. Now, saying that, there is a guy that I respect a lot. You guys probably know this guy named Bruce Norris, and he thinks that it's going to be more like the early 1980s, where it is actually going to be flat. And he makes a good argument, because if you think about it, if prices have been going up, but inflation is also causing wages to go up. So if eventually those wages keep going up and up to the point where it's like, okay, people can afford the monthly payment, it's going to keep the prices, from really crashing down. And the other thing is, it's very difficult to argue for a crash in housing, because people that have owned houses, especially people that refinanced, when the rates were like 2%, there's a large amount of people that have rates that are less than 4%. Okay, so they're going to be sitting pretty for a long time. They're not going to want to, sell their house and go get a, 6%, loan. So you got that working for you. You got people out there that have equity in their homes, and the people that do have loans, they qualified them with good FICOs. So there's none of that subprime stuff that affected the recession before. So I'm kind of more in that camp. I think it's gonna kind of flatten out. There might be some corrections, but overall, I think it'll flatten out. Inflation will bring our wages to go up. We'll eventually be able to afford those mortgages, and then things will continue on. But I don't think there's going to be this massive crash like there was in 2008. I really don't see that. Corrections is possible, and those can be overcome.
All right. Well, we'll bring this up next year and see if you were right.
There you go.
It's going to be in the archives.
That's good.
Perfect.
We got you on tape now.
Make me eat my words.
Yeah.
All right.
Mm-hmm.
Ready for the next one?
Yeah.
Okay. Lower rates? Question mark?
It'll be interesting
Oh,
to see.
another low volume. Bear with me 1 minute. I'll just put it all the way up. Start it over here. Here we go.
It'll be interesting to see. But long story short, every single economist, every single trend is showing lower rates by the end of 24 and lower rates by the end of 2025. I'd love to hear from you below. Hopefully, if you're thinking about purchasing a home, I will hypothesize or summarize with this. I believe there's going to be more buyers in 2025 than there is in 24 because we're going to see that lower rates. I believe we're still going to have short inventory, meaning there's going to be more buyers for that same house, and thus they're going to drive up the price. So if you want to purchase a home in the next few years, I would contend now is a great time. Now, great is a relative term to your individual market. Make sure and consult with your team. It'll be interesting to see.
You ever notice the
long story
agents
short,
are
every
praying
single
that the rates are going to come down so that people start buying and selling?
All you have to do is refinance.
What are your thoughts on the rates? I know you kind of mentioned it, but
Well, okay. The thing that people is important to understand about interest rates is that because the Fed has already lowered rates twice, okay, but yet rates are still elevated. So why is that? What people need to understand is that above the Fed funds rate, there's what is called the risk premium. That risk premium is based on the bond market out there. And those are all, investors out there. You guys have probably heard, the smart market, or what is it? Smart money's in the bond market or something like that. So it's interesting that even though the Fed's cutting rates, the bond market is still keeping that risk premium kind of elevated. Okay, so what is that? What did they know that everybody else doesn't know. What are they seeing? So you have to kind of pay attention to that. There is quite a bit of debt out there, and and I'm talking about besides real estate, I'm talking more like credit cards and auto loans and things of that nature. So does that play a factor in the bond market? I mean, maybe it does, because these bond investors, they're not just they're probably not even just in the real estate market. They're in many other bonds out there. So they're seeing a whole other segment of the world out there that us guys, in real estate aren't even involved in. Okay. So when I see those risk premiums still being kind of elevated, it kind of tells me something, that there's a certain world in the bond market out there that still sees some risk out there, perceived or not, in reality. Okay. So, and this is the thing that I believe Bruce Norris was saying also, is that he believes that there's going to be, higher rates for longer. There's been people saying that, and I don't think we'll ever see those 2% or 3% rates. But I could probably see in the 5s. I think that's a reasonable projection, I guess, that you can make. And I mean, I'm not going to see like next month or something like that, but sometime later on next year, maybe 2026. But look, if we get a crazy, what do they call it, black swan event, and that nobody sees, and rates can come down to zero again. So you got Kiyosaki over here. He's saying that the Earth is gonna explode or whatever. I don't, unless, like I said, it's a black swan event.
Right.
I think we'll probably be somewhere in those high fives maybe.
Yeah. Yeah, and it's like, just buy the real estate if it's a good deal. Hold on to it for as long as you can, as long as it's cash flowing.
I agree. Yeah.
Well, and I know they're high right now to us, but aren't interest rates still pretty historically low?
Yeah, actually, they're kind of. I think they're kind of at an average right now. And I was having a conversation with my brother. He's like, yeah, there was times where the interest rates were like 20%. He's like, yeah, it's like, when I bought my house, I think, he was in the 8s or whatever. It's like, yeah, the rates will go down. I just refinance, So
yeah.
You have that working for you.
Right. Absolutely. I think it's fair. Nice. Anything else?
We got one more video.
Okay.
The year's almost over, but real estate is a different game in 2024. Let's see about this volume here. Oh, low again. And here we go.
When you're getting started in real estate, we have to acknowledge that 10 years ago was very different. I bought my first duplex and it was $12,000 down, $240,000 property. My mortgage was $1,500, including principal, interest, taxes, and insurance, and each side rented for $1,100. That same property today, if I sold it at a 20% discount, would go for $500,000, and the principal and interest would be $3,600. Each side would rent for $1,600. So it's just way harder for a Gen Z or somebody that's just getting started on their journey to financial independence to house hack. It's not as simple as it used to be. So absolutely want to acknowledge that challenge. You've really got to be willing to make some sacrifices, move out of town, move to a different location, get really creative, find short-term, mid-term, or other opportunities, maybe find assumable mortgages, those types of things to make house hacking as obvious as a win as it was for me. It can still be a much better alternative to renting or homeowning. When you're getting started in real estate, we have to acknowledge that 10 years ago was very different.
Bigger Pockets too. That was Bigger Pockets was all house hacking. That was like, that's how you get started. You rent out your room and do all that. But it is kind of interesting. Maybe it's just you can't cut it anymore like that. So you got to go a different direction.
He had a failure to launch problem. And so his parents said, you should move out of state and buy something less expensive.
Go out of town.
That's why he went.
Exactly. We'll put the down payment.
That's it.
12,000? No, we'll cover that.
Yeah, we'll cover that. Yeah.
and you know, and there are markets like that out there. You know, it's. I've seen stuff out in the Midwest and the Southwest that you know, it's not going to be in a gated neighborhood or anything, you know, but you know, you can, you know, get a house out there, 200,000, 300,000,
Right.
you know, put your 10% down, your 20,000 down, and you're good to go.
Yeah. I just like living by the beach, so that's not going to work.
Yeah, I'm with you on that. Yeah. But you know, he did say something interesting about the assumable loans things. I think that's something that's going to be very popular. It is pretty popular right now in the commercial space because you do have a lot of Fannie and Freddie commercial loans out there that allow for that. I'm not too sure if that does that work too in residential right now? Or
certain loans, FHA, VA.
Oh, it's just the FHA ones.
Yeah.
Mm-hmm.
The VA. Yeah.
But
See,
you have creative finance, you have sub 2, you have seller finance.
Mm-hmm.
yeah.
And get around all that.
Yeah, and those are, I think those are really great ways to try to get into a deal and you know, make a win-win for both sides there.
Yeah.
Yeah, I mean, I see people in these groups who are taking over people's loans that are at the 3%, you know, and for whatever reason they have to move, relocate, and you know, maybe they don't have a lot of equity, so they're willing to give up that mortgage, and you could take it over, and there you go. Now you got a 3% loan.
Yeah,
not too bad.
I saw one the other day. The only problem was it was in Hemet.
Oh, yeah.
It was a nice place.
Yeah?
Yeah, it was a very nice place.
Okay.
But it was like the value, I think the value was like, I want to say close to 500, and they were wanting to sell it for 480. So there's not a lot of equity in there, but you could literally move in with, you know, 20 grand.
Send that one to me.
The Hemet one? Okay. No,
I mean, no, you could
no.
buy it as a rental, I guess.
Yeah.
No.
No. We're
right,
going to put
renting.
your favorite renter in there.
Yeah.
I'll give her a call.
Okay.
Say, Alex has another place to rent for you.
That's where it all went down, was in Hemet. So I just don't have a lot. It's better flipping market for me out there.
Yeah.
Awesome. Well, we really enjoyed having you here, Omar. How can people, you know, reach out to you if they have any deals or they want to learn more about multifamily or maybe property management?
Well, be my website's LeRuInvestments.com.
Okay.
And you know, people can email me, Omar@LeRuInvestments.com, and that's where I'm hanging out.
Perfect.
Nice.
Yeah. Awesome. Well, I appreciate it. And if you can make it out to the meetup, we'd love to have you there. And if not, then
absolutely.
we'll see you in the new year. And thank you so much.
Yeah, thank you guys for having me. I had a really fun time.
Thanks for coming.
All right, you guys, we will be back here next week. So make sure you tune in. Please share this episode with any new or experienced investors. And we'll see you next Thursday.
Take care.
Bye.
If you want some more advice on real estate investing, reach out to us one-on-one.